kick things off with a flood of earnings hitting the street. Netflix, Chipotle, Snap, Texas Instruments, all on the move after reporting results. We kick things off with Netflix. Julia Boorstin's in Los Angeles with the very latest. Julia, very volatile in the after-hour session.
That's right. Huge spike and then giving up a lot of those gains. Melissa, great to have you back. Netflix adding 15.7 million subscribers in the quarter. That's about double what analysts expected. The company also forecasting the addition of 7.5 million subscribers in the second quarter. That's more than 3 million more than analysts' predictions for that. Now, CEO Reed Hastings saying that there are three main effects of coronavirus. In addition to subscriber growth temporarily accelerating due to home confinement, he says that international revenue will be lower than previously forecast due to the dollar's sharp rise. And he also says due to production shutdowns, some spending on content will be delayed. Hastings also says he expects viewing to decline and subscriber growth to decelerate as home confinement ends. And as for the impact of production shutdowns, Netflix does expect some delays by about a quarter, but they do expect second quarter content to be only modestly impacted. Hastings saying in his letter to shareholders, quote, "Since we have a large library with thousands of titles for viewing and very strong recommendations, our member satisfaction may be less impacted than our peers by a shortage of new content." Now, Melissa, Netflix, of course, is hosting its quarterly video call, and that will start at 6 p.m. Eastern. Back over to you.
All right, Julia, thank you. Julia Boorstin. Let's trade this. Dan Nathan, I go to you first because they made a lot of interesting comments about who might sign up after this confinement period and who might not, and also about liquidity, which has always been a major concern for Netflix shareholders.
Yeah, so I just want to actually make one point too here. You know, for all the people who are sitting there telling you don't pay attention to earnings, Q1 earnings is not important. Q1 earnings is very important. The commentary is very important. It's going to give you a guidepost for how these companies perform for the rest of the year. And the sentiment as far as the commentary, despite limited visibility, very important. That being said, here's a company that had very high expectations coming in. The stock was up 30% on the year or so. That subscriber number was fantastic. Reed Hastings, not afraid to tell you the truth, that things will decelerate. Subscribers were already decelerating prior to this pandemic. So then the other question that you have is the negative free cash flow spend that they've had to obtain and create content. That is going to continue. And you got to remember, the story about Netflix coming into this year was the competitive situation and that spend on content. So why did the stock fade in after hours? Because it was as good as it gets for 2020 for this company. An unforeseen thing that's affecting most of their competitors adversely is helping them out, and it's probably a downhill battle from here for them. So to me, I think the stock in the 450 level is probably still a sale.
I mean, going into this quarter, Guy, a lot of analysts were already expecting some sort of pull forward in terms of signups. And Netflix actually addressed that directly so far in the commentary, saying that people in confinement, if they have not signed up during confinement, they're not likely to join after, which is a signal to me, at least, that it's almost as good as it gets when it comes to getting new people to sign up because of this confinement. They had this experience with Netflix, and if they're not going to sign up now, they're just not going to sign up ever.
You can make that argument. You know, Dan Nathan said it, you said it, a good Jack Nicholson, Diane Keaton movie, if you recall. And I'll play devil's advocate here. I mean, I think it's a fine quarter. I mean, the knock on Netflix has been every quarter, people saying it's as good as it gets, and it just keeps getting better. And I saw this Tiger Mare and Tiger King, and that thing was ridiculous, and people are signing up in droves. So I can understand why you'd want to take profits in the name, especially given what the broader market did today. I would trade it the following way. I would buy it again against that old high. I think it was July of 2018, $419. I would be concerned on a close below 385. Otherwise, I think you stay with the name. One thing I would be worried about was, and this is a Tim Seymour thing, and I'll let you tell everybody what it means, but the ARPU numbers were disappointing. That's the one thing out of this quarter that would give me some pause, but the net adds were ridiculously strong.
ARPU Q Tim.
Look, I'm not losing sleep over ARPU, but thank you for cueing that guy. I'm losing sleep over the valuation. And so what I worry about here is that there's a lot of things that may or may not change in terms of consumer preferences and lifestyle after COVID-19 settles down. One thing that's not going to change is the competitive landscape. I mean, HBO Max goes live May 27th. There may actually be some offering to AT&T subscribers that's actually free. I look at Netflix and whether it's as good as it gets, as now has been said, or just where they have ability to improve on these comps. I struggle with their ability to raise prices anytime soon. Netflix had the ability to raise prices 2 years ago. We were surprised by that. It was a driver for the stock. But high multiple stocks in a consumer environment that I think we're going to find ourselves in, I think we've proven with Netflix at times that's been a liability. So the free cash flow burn is still an issue. I know they say they're going to be around $1 billion in 2020, which is going to be down from $2.6 billion last year. The debt levels are material. I'm not saying it's something that's going to be an issue near term, but I think this company has to make money or has to generate free cash flow. The multiple makes no sense, especially in the competitive landscape, or you need to give that multiple to a lot of other companies in the same space.
I think the price increases, I mean, that's important. If you're going to be looking at a subscriber base, I mean, internationally is one thing because that's where the growth is expected to be. And right now, the dollar is an issue there. But in the U.S. and Canada, if the subscriber base is going to be somewhat stable, not growing terribly fast, material price increases or any price increase is going to be the way for Netflix to make up some money that they need to spend on content, Karen. So a question for you. During confinement, has Netflix become more valuable to you or less valuable to you or the same?
It has become more valuable to me, but I agree with you. I think this issue of their ability to raise prices is really the question. You think about this massive subscription number, and it was massive. How sticky is that new subscriber base, right? So when things are, when we reopen the world, are we going to see big changes to that? And it gets to your point of also how sticky, but also how much can you charge for that? And I think they've probably maxed out for the near term. And so, I mean, it's an extraordinary company. They are so far ahead of all the competition, but there is competition. And even though it's fantastic, to me, it doesn't mean you pay any price for it no matter what. And at this valuation is just so far out of my range that great product, but can't get on board in the stock.
All right, shares are down about 0.5% right now. Let's bring in tech analyst Gene Munster, managing partner at Loop Ventures. Gene, great to have you with us. What's your take so far on the quarter?
Melissa, I'm always apprehensive about consensus thinking, and the panel, I am on the same page here and agree that, well, a staggering number, that the word of the day is not their 15.8 million new paid set abs. The real word of the day is temporary. And in order for companies to grow into their valuation, they need to tap into an undeniable truth about the future. And when you think about Netflix and their valuation and where they're going, streaming is no longer an undeniable truth. We've already uncovered that years ago. Yes, Netflix is a leader. But at the end of the day, what's powering their business today is this is strong medication for shelter in place. And ultimately is that as people experience that, they, on the other side of this, the truth is they don't want to be in their home as much. And there are going to be services, these types of services will see diminishing growth. Now I want to emphasize two other aspects to this belief. I'm on the same page that the rest of the group is, that this is overvalued here. But this can continue. They will likely be beating numbers for the next couple quarters because we're likely going to be in this place for some time. So think of the June quarter. They guided to 7.5 million paid sub ads. It's probably going to be closer to 10. And the same thing will happen in September. So I think that as someone who's negative, I'm prepared that this will last for, the positive numbers will last. But I don't think the stock will respond.
Want to take a pause here. We do have some breaking news. Want to go straight to Washington, D.C. and Kayla Tausche, who has it. Kayla.
Melissa, good to see you again. The Senate has unanimously passed a $500 billion relief package that would see the small business loan program expand by $300+ billion. and about $100 billion provided to hospitals and testing resources to combat the coronavirus at the state and agency level. Now, many senators stood up and objected in principle to the size of the package or the process that was run on Capitol Hill, with legislative text not even made available really before many of these senators had to cast their votes. But even so, Melissa, it was a unanimous vote that will tee up a vote in the House as soon as Thursday, and it will still be several days after that before small businesses can get this new money.
All right, Kayla, thank you. Kayla Tausche in Washington with the very latest, some more relief there for small businesses potentially on the way. Gene, let's continue our conversation about Netflix. They did comment about liquidity, and they said that there's a $750 million unsecured credit facility that they have not yet tapped, and also that they have more than 12 months of liquidity. Julia had also mentioned that they're able, at least for the short term, to not spend as much on content simply because of the delays in production at this point. What is your sense on the true liquidity position of this company?
Don't overthink it. They have an outsized debt portion. We're talking about in excess of $10 billion to fund this content. And I think whether you look at the near term or the long term, Netflix is going to be around for a long time. But ultimately, they have fueled the growth of content from debt. And I think that that is an important differentiator between Netflix and the other FANG stocks. And so I think there'll be a going concern. There's no question in my mind that Netflix is going to be around next year. I just think it's going to be, the stock will be lower than it is today.
All right, Gene, thanks. Gene
Thank
Munster, Leap Ventures. Guy Adami, we're seeing the stock move around a lot in the after hours. And when I say a lot, it was up 4% at one point right after the results, now down about 0.7%. So what's your take here? What will you be listening for on this video call tonight?
There's new methodology. A lot of free subs. When do free subs become paid subs? I mean, a lot of things that Gene brought up I understand. And I understand why, if you've ridden this stock, there's absolute reason to take profit in the name. My inclination is that's been true for a couple of years. They always seem to pull rabbit out of the hat. They seem to have, once again, in terms of these ads, understanding the backdrop. I think you buy it against that previous all-time high, the July 2018 high of 419. And again, I would be worried. 385 had been this prior level out of trouble with. I'd be worried on a close below there. I just don't think, all things being equal, I'm not necessarily sure you're going to see that. But I've been wrong before, so we'll see what happens.